avoiding takeout, financing Coachella tickets, or even pop music, you may have seen some buzz online about recession indicators.
Recession indicator, recession indicator, recession indicator.
Here's a few recession indicators you may not have noticed. 1. The growing number
60% of general admission ticket buyers at Coachella use buy now, pay later to finance.
But how do we know if we're actually in a recession? Well, technically, it has to do with GDP, or gross domestic product. If you don't know what that means, one economist says, don't feel bad.
I don't think it's sort of shameful to say that even after taking first or second year economics, to say I don't quite understand what GDP is, because it's a distant measure.
GDP is a general measure of economic production. It shows the market value of all final goods and services, like cars, crops, or transportation produced in the country. It reflects the overall performance of a country's economy. Now, a recession is 2 back-to-back fiscal quarters of negative real GDP growth. That definition can feel like an economic puzzle. So let's break it down. Fiscal quarters divide the year into 4 3-month segments. If that GDP takes a dip for 2 of those quarters, or 6 months, we find ourselves in a recession.
But I think a better way to think about recessions and how they relate to gross domestic product is that, as I mentioned, a recession should be understood as a general decline in the economic activity.
It's not a recession if you have one bad quarter, which last happened in 2023. It's like if you have a bad morning. It doesn't mean you had a bad day. But if you can't recover in the afternoon from your bad morning, then your whole day is shot. Okay. Why are we talking about a recession now? Dalhousie economics professor Talon Ishchan says it's because of trade uncertainty and how people are feeling overall.
If they feel the pressure in the job market, they will start thinking about it, and the questions about recession will come up. So I'm not surprised that that's happening. If they are finding it more difficult to find a job, they're finding more difficult to get a pay raise despite a relatively elevated inflation rate, especially food prices, housing prices, and that is in their mind. So recession becomes the first word that they will think about.
If we do slip into a recession, how long can we expect to weather the storm? Ishchan says it will hopefully only last 3 or 4 quarters before the economy bounces back.
These things may last, they may drag on for a while, especially for individuals who are left out of the labor market, employment opportunities. For them, the impact of a recession may be very long lasting. So there is no question that recession will have very varied impact on different groups of individuals. If you're coming out of university, the job market is horrendous, you can't find a job, you get stuck in a low paying job or no job for long periods of time, that's going to affect your lifetime earnings.
Ishchan's advice? Cut down on extra spending as much as possible.
But it's a bit of a reach for anyone to say this thing, for a lot of people who are really, as I said, living from paycheck to paycheck.
That may sound bleak, but don't lose hope. Ishchan also suggests a rainy day savings, but not in high-risk markets like crypto. As he says, now is not the time to be taking financial risks. And lastly, Ishchan says ultimately, the economy will bounce back.